Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day as well as end of month. First trading month of the year is in the books. So on to February. Unbelievable month for the indices. I have the stats right over here. I believe these are linked up, and they should be correct, but just astounding numbers to finish the month. We had the S&P was up over 6%, ended up 6%. I mean, today helped with the S&P up 1.5%. I mean, what an end of month. I mean, pretty amazing. When you look at the numbers and what we've done recently, consider that it's in the middle of earnings season. Really not much of a hesitation from the markets, as well as we have a Fed day tomorrow. Not only U.S. Fed, but then we have ECB out on Thursday too. So pretty much a rally into these events. And so Q's finished again. I'm astounded, but up 10% for the month. And the small caps did basically about the same, up about 10% for the month. So really a strong finish to the month. Yes, tomorrow is FOMC, so things could change. Am I really worried about and going to stay up all night worried about what Powell says tomorrow? No, I'm not, because you can basically, you don't have to stand still in this market. And I find Twitter, a very funny place. A lot of scare tactics. Oh my God, this is going to be so bad. And you lighten up. We talked about this basically all week, how the market and the way that the calendar lined up. If you like to kind of start the month fresh, you can unwind your positions and kind of start neutral and listen to what Powell has to say if you're really, that worried that he's going to upset the markets that much. I mean, and I get it. The last 3 months have been particularly bad, especially not only just the day of the Fed, but the following day. So, what is he going to assume? Let's play devil's advocate for a minute, and then we'll go over the indices and we'll talk about the performance. So I'll bring this up and we'll talk about a couple earnings reports as well. But, here's what the Fed is implying for tomorrow: 25 basis points. Again, like, I see a lot of people saying, "Oh my God, what if he does 50 basis points tomorrow?" You could always wonder these things, but the market is pricing in 25. I don't think he really wants to shock the markets. The Fed doesn't normally want to shock the markets. Again, there's so many conspiracy theories about, what what the Fed's job is to do, but really what they're trying to do is encourage full employment and low inflation, right? And to basically have a healthy environment. They're not trying to make stocks sell off. Do they want to make sure inflation stays down? Sure, absolutely. Could it come back up a little bit from what we've seen the last couple of months? Of course, you have to be logical with some of these things. But it's important to kind of keep a level head about these things and understand that if the inflation rate does come up a little bit in the next couple of weeks, on the next CPI data report. I mean, well, let's kind of take it day by day. And yes, this was a huge month. And if you made, a decent amount of money, you lock in profits. I mean, that's what a trader does. I mean, a trader just doesn't stand still and say, "Oh my God, what's going to happen if, things go bad?" You make adjustments as you go along the way. I myself, for the month, I always tweet up my P&L, which I will do that tomorrow, or I could actually do it today, because I have it all calculated and ready to go, and then I have to send it over to the U.S. Investment Championship Committee, which because I'm in that contest for the year. But I finished up 7.6% for the month. I'll have a P&L. I always put out a P&L video for members, more detailed about trades and about lessons from the month. But, in short, like, I didn't really go real aggressive this month. I just wanted to really start the month in the right way. Looking back at the month, because I think I did a very good job at not anticipating, but playing the right groups of stocks, the stocks that I wanted to be in. I'm a trend trader, so I'm just not going to play names that are in heavy downtrends. Unfortunately, I missed out on Tesla. Like I didn't play Tesla to the downside. I didn't play it to the I didn't play the bounce to the bottom. And congratulations if you did. Just didn't fit my system, and that's fine. It's really about executing your system, trusting your system and executing and following your trading plan. So I did just that, and I'm very happy the way that I executed. I came into the beginning of this month and I wasn't taking full size positions either. I really kind of just wanted to basically hit a lot of base hits this month. And, I did get a little bit more aggressive at times and added more positions. But, I really kind of traded this month very responsibly and reduced positions where I thought I would. I talked about, like, yesterday, for example, the market was down. I was flat for the day yesterday. I didn't really give much much back on the down dates. A couple of down days this month, but not anything. There was one day in particular where I thought where I was kind of caught off guard and had a down day. But as I say in a lot of these videos, a down day is no big deal. A down week, a down month or something, like that is what we really try to avoid. But you're going to have down days. Why? Because you're not perfect. So I'm very pleased with that. I also run another program called the TTG Trend Portfolio, which was up 6% for the month. The whole time I carried a cash position in that portfolio. So that worked out, pretty well. So yes, going into this, into this meeting, I'll be a little bit lighter than expected. But, another thing besides what they're going to do for tomorrow, right? Look what the market is pricing in after this. And we've talked about this in these videos, but there's just not, we've seen, we've seen Fed meetings where, a couple of them, they did 50 basis points. Let's see if I can bring up this chart really quickly for you guys. All right, here is the chart that I sent out last night, and I put a yellow line through like the date of the FOMC, but each one of these meetings is each one of these lines or these stair steps up is where we've had where we've had increases, right? So we're getting to the point where yes, they're not going to be increasing interest rates for that much longer. And I'm sorry to say that if you're speculating that inflation is going to continue to rise like crazy, this is not in the data right now. So it is what it is. We're going to get 25 basis points tomorrow. We'll probably get another 25 basis points in March, right? And then that's basically it. Now, of course, Powell can kind of, change, move the ship another way, depending on, what if inflation data does change dramatically. But, this is what we have in front of us. And, and I think for the most part, the markets are handling it pretty well, considering that the interest rate is much higher than it was a year ago. Now, to talk about this month's performance, and I should have this here, right? So it's pretty astounding. A lot of risk on groups, right? For the month, you could see that value outperformed. Value was up 10% this month versus growth was up 10% versus value up 2.8%. One of the things, like if you look at these sectors, right, this was the group of this is the group of sectors that I kind of look at. You could see that the defensive areas of the market, some of the areas that did pretty well last year. Of course, energy was the best group that only finished about up 2.8%. So it trailed. Also, things like healthcare, which had a good year last year, was down. We actually finished down for the month so you had to make so much, there was this month you had to make adjustments depending on if you wanted to be in some of these groups. Like I said, I didn't want to really be in names that weren't downtrends, even though, for a while we saw some of the worst performing areas of the market in 2022 really come back pretty hard and rally off the lows. But then you have other groups like the home builders, which were up another 15% year to date. Your steel stocks, right, we're up 17.5%. Again, like this is just for the month. Some of these numbers you think, oh, geez, that's for the year. Nope, it's just for the month. Obviously, clean energy, Bitcoin blockchain stocks, they had a really good month. Like I said, those were some of the beaten up areas of last year. Really pretty astounding. Where are the industrials on this too? The industrials kind of chilled out a little bit. They were such a strong group, but they were up 3.7% for the month. So that's your quick recap of month performance. Just to kind of go over a couple things, but right, here's the ITB chart. Right, again, this is where I think it's kind of really interesting. This is not a group, right, that I really spent a lot of time trading, but it just goes to show you, right, with everybody talking about how bad housing is, right, this is one of your best performing areas of the market. And I was reviewing charts yesterday, and one of the charts that just not just the ETF, but individual names, home builders. I mean, they look very good, and it's just amazing to see the performance and the strength in the housing stocks. A couple names that reported that I think are interesting, and we're not getting all great. We're not seeing all great earnings reports. As we say every quarter when we start the earnings quarter, is that we're going to find some outperformers and we're going to find some underperformers. AMD had a nice report after hours. They're up a little bit, but look at a couple names. I'm going to bring up 3 companies that are in different areas of the market, right? So this is a name that nobody really talks about. It's ST, right? So this is Sensata. If you're not familiar with this company, that's fine. That's what we do. We look for these names that are doing something different. But notice it's a cheap company, right? It's not an expensive company. They manufacture, distribute electrical components, right? Looks like they're in Massachusetts. The company offers automated sensors, motor protectors, circuit breakers, thermostats, right? So I mean, okay, so here's one area of the market, right? This will go on our earnings list. Really, really strong. If I had to say, I think it goes up to 52.37, right? Another name too is this Allegro Microsystems. We continue to see, I don't know what it is with some of these semiconductors with the letter A, AEHR, ALCS. I mean, well, here's another one, really nice earnings report and breaking to the highs. And then the third report today was a smaller, well, this is not that small of a company, but Dover. And maybe this might be a leader for the next quarter. I mean, look at the weekly chart here in Dover, breaking through this year's value area. And that's a nice level to trade against, even if it kind of comes in a little bit, 145. So, we're continuing to find some of these names that, could have the potential to be leaders over the next quarter. And, I'm excited about the next month. I haven't looked at all at the indices, but, we'll talk more about this once we get to the month of February, which will be, obviously tomorrow. We're still in the, from a weekly standpoint, I'm not really going to spend too much time here because we're not even halfway through the week. But it looks like we will probably open up the month either at or above the value area for the month of February. So I find that constructive to start the month right around the top of value, and maybe we can go in and take this out. A couple other things, and I'm not trying to give us a pat on the back or anything like that, but if you've been watching my videos, you know that we've been talking about other things than just the S&P 500, right? There's been so much attention on people, getting out their trend line and saying, oh my God, will we or won't we at the 200-day moving average or this trend line? You got to look at others, my opinion, right? This video, of course, is for information purposes only, but you got to look at other things, right? You can't just I was listening to somebody early today and saying how incredibly lazy it is just to look at the S&P 500. I have to say, I agree with them. If you're only looking at the S&P 500 and that chart, you're really doing yourself a disservice, right? We talk about all the time, about whether or not you want to, like, if you're paying for like a trading service or something, but if you just don't have the time to kind of look at these things and for someone to broaden your horizons, right? Well, that's what we're here to do, and to kind of give you the advantage to say, hey, did you know what the RSP looks like, the equally weighted S&P 500? Do you see the outperformance of this, right? Do you see the difference between looking at the Qs and the equally weighted Qs? One is drastically outperforming the other one. Why? Because it's not biased, right? The biggest companies aren't the biggest weights, right? So again, we've also kind of really hit the nail on the head with talking about the increase in the participation, right? And we use the NYSE for that. You could put that up on stock charts, but we talked about that in the beginning of the month, right? And about we want to know when the wind is at your back. So looking at something that tells you whether breadth is expanding or contracting is a really great tool to use in your trading, and that's something that we did in 2022 as well. But for the last, for basically all of January, we've seen breadth expansion, and that's a very bullish signal. Now, will that continue? I don't know. I don't have a crystal ball. But while breadth is expanding, our goal is to be on the right side of the market, right? And then of course, what's been going on in international. I mean, look at what European stocks have been doing. So, I never want to call anybody out on Twitter, but the lack of doing work, with just showing an S&P chart with a 200-day moving average, that's not that's not good analysis. And saying, oh my God, we're at this trend line. You have to you have to be able to kind of go a little bit deeper than that, right? Look at other indices, look at what global indices are doing, look at what sectors are doing, right? What sectors are leading, which ones aren't. That's another thing too, is we went over this, in the spreadsheet, the defensive area is lagging, right? And more of the risk on areas of the market, right? Does that give you more of a sense of bullishness or bearishness? So I think really going through that and seeing where they were taking profits this month, which was in the defensive, lower volatility areas of the market. So listen, I'm very enthused about, starting off on the right foot, for the month of January, and looking to kind of really do well, navigating what this market is going to throw at us for the next 11 months of this year. So I hope you did well. And if you didn't, if you had a tough time of it, it doesn't matter. I say this in every one of my P&L videos. It doesn't matter if you did poorly or if you did exceptional in 1 month. You still have to concentrate on doing well, and for the next month, right? And that's the Bill Belichick mentality that I use in comparing a little bit of football to trading, right? They always ask Bill Belichick in the beginning of the season, hey, do you think you're going to make the playoffs? What does he always say? We're going to concentrate on the opponent in front of us, right? For me, that's the month of February. So I hope you did well, and if you're looking for somebody to broaden your horizons, as we do on a day-to-day basis, you can check out tribecatradegroup.com. You could still get half off your first month, and it's an easy way to kind of check us out. And hopefully we are doing just that for members and adding value. All right, guys, members, you'll get my P&L video out a little bit later. Thanks very much for attending, and I'll see you guys back in the room tomorrow morning.